What's up, investors? It's the Russian dude. Let's talk about right now why the Wall Street, specifically JPMorgan, sees the possibility for the S&P 500 index to drop up to 25% by the end of this year already, reaching approximately 4,200. This information was presented to us by the representative of JPMorgan, Marko Kalanovic, and the statements that he is making pretty much are the same as we've been talking about on this channel for the last several weeks. I'm not saying I'm as smart as the Wall Street, but I mean, it was just plain and simple. It was just right there. First of all, he is mentioning that right now the performance of the majority of individual stocks and the performance of the index itself is completely disconnected. He's basically saying that the growth of the S&P 500 since the beginning of this year of approximately 15% is not even close to be justified by the inhabitants, by the members of the S&P 500 itself. And he presents the main three reasons why he thinks exactly like this. The reason number one, it is because the economic growth and the GDP growth is slowing down. Check, we've already been talking about this. The inflation is barely budging, and in some particular industries it even started to go up as well. Check as well, because we've been talking about the inflation once again. And then obviously the interest rates. Most likely there will be just maximum one interest rate cut this year, just like some kind of a holiday bonus. Maybe there won't be any cuts at all, and the interest rates will have to remain higher than usual for longer than usual periods of time. These three factors, according to Marko Kalanovic, are the main reasons why there is absolute disconnection between the S&P 500 and its members. He also sees that the market participants right now are overly optimistic. That is why, despite whatever news are coming, they keep buying shares, just speaking in general. So it only is a matter of time as soon as one bad major news comes in, and this is when the market can start inevitably correcting itself. And from these three factors mentioned previously, Mr. Kalanovic thinks that the interest rates could be this bad news that the market is kinda waiting for. Because yes, if the rates remain high, or especially if there are no cuts at all in 2024, a lot of companies which are heavily capital dependent, specifically borrowed capital dependent, they will be struggling a lot, because for borrowed capital you have to make interest payments. And guess what? A lot of top companies in the index itself are technological companies. A lot of them, they have billions of borrowed dollars. But this guy, he is obviously not being all Armageddon and this is the end of the financial world. No, he is just literally predicting a healthy correction, which at this point is coming due. Well, some people think it is already long overdue. And just like we on this channel were talking about these so-called magnificent 7 companies, which are pushing the performance of the S&P 500 index with them. According to Marko Kalanovic, he thinks there are 20 top companies within the S&P 500 which are doing exactly the same. The performance of these companies, this is exactly what keeps the S&P 500 still afloat. And for example, just to prove the point about the complete disconnection between the members of the index and the index itself, right here you can see the graph which shows that the correlation between these two is at its minimum levels. Next, you can see that in the first half of 2024, the index updated its all-time high numbers 31 times. The last time it happened was approximately 100 years ago. And whenever you have your stock market growing like this, without major good news, this should be a sign for concern. And ultimately, another graph shows that the volatility of the S&P 500 right now, it's also very minimal. There are 41 trading days straight where the index did not decline of 1% or more. And just in general, there is a lot of, once again, optimism on the stock market, which brings the put option contract prices to extremely low levels. What it basically means is that not that many people see the S&P 500 going down in the near future. But just like as always it happens on the stock market, very big declines, major corrections, recessions and things like this, they always come when you least expect them. Right now, based on this absolute optimism that we have right now, not too many people expect a healthy, overdue correction. And while I agree with most of the points that Mr. Marko Kalanovic is making, I do not think that the decline will reach 25%. Most likely it will be in between 10 to 15% by the end of this year. We will see at least one correction like this. This is my just honest personal prediction. For these guys, please let me know down below in the comments whether you agree more with me, with Marko Kalanovic, or if you think that the S&P 500 will continue going up. And as always, thank you so much for watching. Please like this video, subscribe to my channel if this was interesting, informative, or both, and see you tomorrow.